The registration for one of my cars has just come in. It's like $1,000 for 12 months, which sucks. So I'm thinking, rather than me paying this out of my own pocket, can I do a quick trade? Make the $1,000, pay my rego from the stock market. Today's Friday, the 5th of September. Now I'm having a look at some of my stocks, and in particular, I'm looking at PLS. And I've talked extensively about PLS in previous videos. There was a video I did about 3 weeks ago, where I sold some call options over the PLS shares that I own, and got paid about $1,800. I own 8,000 PLS shares that I purchased for about $1.78.6. Today they're trading at $2.33.5. So on paper, I'm up about $4.5 grand, which is nice. But if you've seen my previous video, this doesn't take into account all the times that I've sold options over PLS. And also, it doesn't take into account the dividends that I've been paid. And if you have a look, the reason I'm looking at PLS is they've literally gone ex-div today, Friday the 5th of September. Have a look at the last dividend payment, ex-div date, 5th of September. That's today. And they're paying 14 cents per share. I've got 8,000 of them. So 8,000 shares times 14 cents dividend is $1,120. And they're going to send me that on the 27th of the 9th in a couple of weeks. So I've got $1,120 coming in a dividend payment. Well, that's enough to pay my rego for 12 months. Yay. If you have a look at the options that I sold on PLS last month, I sold 80, which gives someone the right to buy 8,000 PLS shares from me. As you know, I own 8,000 PLS shares, so this is a fully covered call option. It's covered because I own the shares. I gave someone the right to buy all 8,000 shares off me on or before, because this is an American style option, not a European, on or before the 18th of the 9th. Well, today's the 5th. So there's literally only less than 2 weeks before expiry. The strike price is $2.30. So I'm literally saying, hey, you can come and buy my 8,000 PLS shares from me on or before the 18th of September for $2.30 per share. Well, they're currently trading at $2.33.5. So this option is what they call in the money. You can buy PLS off me for $2.30 rather than buying them off the market for $2.33.5. So I'm going to get exercised on this option if the price keeps going up of Pilbara Minerals. When I look at the stock chart of PLS, I'm like, is this stock going to continue going upwards and finish above $2.30 in the next 2 weeks? And I'm like, okay, I don't know. I don't have a crystal ball. The fact of the matter is, I've just collected the 14-cent dividend, and even though PLS has gone ex-div today, the stock price is actually up 1% today. So the dividend, 14 cents, taken out of the stock price, hasn't seemed to have affected the price of the stock at all. To me, I'm feeling like I don't want to sell this stock. I want to hang on to it. That's my personal view. The bottom line is, the options that I sold and collected $1,840 for, I'm more than likely going to get exercised on. Meaning, if PLS keeps going up in price on the 18th of the 9th, which is only a couple of weeks away, I'm going to get exercised and I'm going to be forced to sell my 8,000 PLS shares for $2.30, which is fine. And I've accounted for that and I've calculated that and I make a lot of money from doing that. But what I've decided to do instead is I'm going to roll these options. And what that means is I'm going to buy these options back and sell the same option or a similar option, but in a further month. So at the moment, I've literally said last month when I sold these options, you can buy PLS off me, all 8,000 of them, for $2.30 per share, and you can do it any time between now and the 18th of September. What I'm going to do is I'm going to buy that contract back and roll it out and say, well, yeah, you can buy PLS off me for $2.30 or thereabouts, but rather than having to do it between now and September, you can literally do it between now and October or November, December, whatever. So I'm selling more time. Because I'm selling more time, I get more money for it, obviously. Because if you're forced to buy something off me in the next 2 weeks, that's worth less to you than if you've got 4 weeks, 6 weeks, 8 weeks, whatever, to do it. I'm selling time premium, hence it's worth more to the buyer and the seller. So let's have a look at this. So if you saw my previous video, on the 11th of the 8th, which is August, the 11th of August, I sold 80, which is 8,000 PLS options, giving someone the right to buy PLS shares from me, 8,000 of them, for $2.30. And for that, I collected 23 cents per option, which was $1,840. But after costs and brokerage, I ended up with $1,793.61 in my pocket, which was a nice trade. That was it there. 11th of August, I sold 80 contracts, 23 cents each, which is $1,840, and I collected $1,793.61 in my pocket. Now I'm going to buy these back, because in order to roll them, I have to get rid of this obligation. Obviously, I can't give someone the right to buy these shares off me in the next 2 weeks, as well as October or November. I mean, I can, but I'm going to be left exposed, more than likely, because this option here is probably going to be exercised, and then I won't have 8,000 PLS shares. So I need to close this contract first, and because I sold these options, to close the contract I need to buy them back. Now here I sold them for 23 cents, so if I can buy them back for less than 23 cents, I'm making money, right? Now if you have a look at the option, it's the PLS ZY9, which is the $2.30 call option, expiring on the 11th of the 8th. That's it there. PLS ZY9, $2.30 call option. Now that's currently trading today for 12 cents bid and 16.5 cents ask, meaning I could buy it back right now for 16.5 cents. Someone's offering to buy it for 12 cents. Someone's offering to sell it for 16.5. If I come in there somewhere in the middle, my order should get filled. Bottom line is, I received 23 cents for this option last month. Now I can buy it back for somewhere around maybe 14 to 16 cents. So that's profit. So I placed my order. This time I'm buying to close. I'm not selling to open a trade. I did that last month. I sold 80 to open a new trade. Well, now I'm buying these options back. So I buy to close PLS ZY9, the same option series, 80 of them, because that's how many I sold. And I'm putting in an offer here of 14 cents. The current offer is 16.5 cents. The current bid is 12. So I'm coming up above this 12 cent bid and saying, I'm not going to give you 16.5, but I will give you 14. So that pushes me in the front of the queue. Now, if this goes through, it's going to cost me $1,120, 80 times 14 cents. 80 contracts, or 8,000 times 14 cents is $1,120. Add the brokerage, 35 bucks. The ETO contract fee, $11.44. The total cost to me to do this trade, to buy these options back, is $1,166.39. So I hit proceed. There's a confirmation of my order. I'm going to buy to close PLS ZY9, the $2.30 call option that expires on the 18th of September. 80 contracts for 14 cents each, for a total cost with brokerage, $1,166.39. Put in my password, the order's gone through. Now, you can see that at 12:08 PM Eastern Standard Time, which of course is 10:08 AM here in Western Australia, the order's gone through and is sitting in the market. But then a few seconds later, because this is 12:08 or 10:08, you can see 2 minutes later, 10:10, I get an email trade notification that order's gone through. So I have bought back the 80 contracts for $1,120 plus brokerage and commission, $1,166. They've taken out of my account. Now, if you remember, when I originally sold those options, I received $1,793. So $1,793. Today I'm buying them back 3 weeks later. $1,793 minus $1,166 is what it cost me today to buy them back. $1,793 is what I received. $1,166 is what I paid to buy them back. That's $627. So even if I do nothing else, I've just made $627 because I sold the options, collected $1,800 less brokerage. Now I've bought them back for $1,100 plus brokerage. The difference is $627. That's in my pocket. So if I do nothing else, that's been a profitable trade because I opened it here 3 weeks ago, I've closed it today, I've made 600 odd bucks. But what I'm going to do now is I'm going to roll these options. I'm going to sell them again, but in a further month for more profit. So I have a look at the PLS options. And again, I'm going to sell a call option with a $2.30 strike price somewhere 2 or 3 months from now, because I'm selling extra time here. So I start looking through the prices. Here's September the 11th. Here's October. And October $2.30 call options are trading somewhere around about 21 to 25 cents. I go out to November. Now remembering, today's Friday the 5th of September, October, November, that's a couple of months away. And we look at the $2.30 options here, about 27.5 cents, 33.5 cents. The $2.31, which is my preference, it's a European style option, is trading at 27 cents to 34 cents. So that's fairly decent. So I'm going to sell this option, which is the PLS GQ7. PLS GQ7, as you can see, is a European style option. For me, personally, today, that's my preference, because a $2.31 option gives someone the right to buy my 80 or 8,000 PLS shares off me only on the 20th of November. So they can't come to me tomorrow, next week, the week after. They can only buy these shares off me on the 20th of November. That's it, because it's a European style option. Now, these are trading at bid and ask of 27 cents and 34 cents. I'm going to put in my offer here at 30 cents because I'm saying, look, you don't have to pay me 34 cents because I'm the one selling them, remember? But come on, 27, you need to come up a bit. So I put in my offer, which is a sell to open because it's a new contract and I'm selling them and I'm opening this as a new trade. 80 times 100, which is 8,000, because I have 8,000 PLS shares, as you remember. And now I have no further obligation over these because I just bought back the options that I'd previously sold. Remember, I had these. Well, now I've just bought those back. It cost me $1,166. So I have no further obligation to sell my 80 or 8,000 PLS shares. So I'm free to write these new options over them. So I'm saying I will sell you, you can buy from me, 8,000 PLS shares only on the 20th of November for $2.31 each. But for that right, today, you need to pay me 30 cents per contract. So 30 cents times 8,000 is $2,400. Brokerage, 35 bucks. ETO contract, another $11.44. I'm going to receive, if this trade goes through, $2,353.61. So I hit proceed. That's the confirmation. My order's been submitted. I have a look. It's an outstanding order sitting in the queue or in the market at 12:15, which of course is 10:15 a.m. my time here in WA. 2 minutes later, 10:17, I get the confirmation that that order's gone through. ComSec tell me they have sold 80 contracts in the $2.31 option expiring the 20th of November for 30 cents each for a total of $2,400. After brokerage and costs, they are sending me $2,353.61. Cha-ching. So, what I've done here essentially, if you'll remember, this morning I had an obligation to sell my PLS shares for $2.30 any time between now and the 11th of the 8th. The likelihood of that happening was very good. Wouldn't have bothered me if I got exercised because I've made a fair bit of money on this stock already. But I decided to close out of that position by buying these back and rolling them out to a further month. So I bought those options back for $1,166. Now I've just sold those same options, or in this case actually better in my opinion, because they're $2.31 European style options. So there's going to be no nasty surprises if PLS suddenly goes up and I have to give up all that profit because I've been exercised. I've got time to roll these options again in a couple of months if I need to or want to. So I'm in a better position, in my opinion, because I now have a European style option with an exercise price, still the same, $2.30, or in this case $2.31, but expiring in November. Now, I've just sold those for $2,353. So $2,353 minus the $1,166 that it cost me to buy the previous options back is $1,187. Cha-ching! So I've basically just pocketed another $1,187, call it $1,200. And my position hasn't really changed. I still own the 8,000 PLS shares. I still get the $1,120 dividend that's going to be paid in a couple of weeks, the 14 cents times 8,000. And now I've just spent $1,166, but received $2,353 for the difference of $1,187. That's close to $1,200 extra, which is $1,000 to pay 12 months of my car rego, and another couple of $100 spending money. So I hope this video's made sense. This is what I love about options. One of the things I love about options. You have the ability to roll your options. So if things are going well for you, like in this case, my shares are going up and up, and I'm sitting on some decent profits, like I am on my PLS shares of $4.5 grand, and I've collected dividends and I've sold options, and I really don't want to sell these shares right now, or even though I was committed to have to sell them, I can buy that commitment back, roll it out to a further month, collect more money in the process. It's a beautiful thing. Let me know in the comments if this has made sense to you. Subscribe to my channel if you haven't already. Thanks for watching, and I'll see you in the next one.